Every time people are talking about the bubble in real estate, the bubble in real estate, the bubble in Dubai, the prices is very high. That is the record break price. So we are expecting this market to crash.
An economic bubble occurs when the price of an asset rises far above its real value due to excessive market enthusiasm. It often begins when investors expect quick profits, pushing prices higher. As more buyers join, the asset becomes overvalued, creating what we call bubble growth. But when reality hits, confidence falls and prices crash suddenly. This burst can cause major financial losses and economic instability, affecting not just individual investors, but entire economies.
I made a presentation, basically in details document, so I can do some analysis to compare between the bubble in real estate, which is people are talking about, okay, and which is a totally different market, AI bubble. So I can show that even that people are really overhyped about AI and they are investing a lot in AI. So what is the situation with AI comparing to what's going on in real estate? So you can understand which one is your safest investment. So today we are going to talk about this awkward comparison. Ready? Let's go for it. So in this presentation, and this video, the total video, I will wear the hat of a devil advocate. What is a devil advocate? Is the guy who's basically looking to the bad side only, okay? And thinking about the worst scenarios can happen in the market. So this presentation for the people who feel like insecure about their investment. So what I'm going to say is going to show you based on the data what's going on in the market, okay? Now, first, before we dive to the data and the information, we need to clarify that what is a bubble? A bubble is basically an asset that overvalued. Basically, the value of the asset is not matching the real value of that asset. So when we say that the bubble burst, it means that the asset value devalued or they lost lots of the value of this asset in the market. So it will become less priced because everyone start to panic and run around that asset. Okay? So now we will consider that we might have a bubble in real estate market in Dubai comparing to the stocks in the AI sector, which is totally different sectors, but the most overhyped sector now for the investors. Okay, so now let's go back for both of them. First of all, let's go to the real estate market. Real estate market in Dubai is asset backed up with a physical, tangible asset, which is the property itself. Then there is an income yield. Why? Which is the income yield? The income yield is the ROI, the rent basically you are getting from your tenant. Uh, the average rental yield for the apartment in Dubai is 7.2%, which is revenue coming to the owner. Then the demand is driven by the growth of the population and the economy growth, which is also the economy in Dubai is diversified. The, in Dubai, the source of the income that Dubai is getting from different resources like tourism, investment in technologies, and all of that. Okay. Then after that, we have also transaction limited because of the amount of inventory in the market. And then finally, we have also historical circle with a previous with a proven record of patterns. So we can see historically what happened in this asset. We are talking about real estate market in Dubai. The current percentage of we might have a bubble. And again, remember that I'm wearing the hat of the devil advocate, which is the worst scenario that can happen, is between 40 to 50%. Okay. So in the worst scenario, we have a 50-50% to have a bubble in the real estate market in Dubai. Now let's jump into the AI market. In the AI market, the expectation is based on the future expectation for the revenues. So there is no proven revenues today showing what's going on in the AI sector. Okay? The capital invested in the AI sector, it's almost, we are talking about $500 billion plus for the annual spending for the requirements of the AI. Then we have lots of technology dependent on that to keep the success of the AI sector moving ahead. Globally integrated with so many systems that is related to risk. Okay? And then we are, there is a shift expectation on the behavioral of the people who's dealing with the AI integrated with this sector. So there is a high potential between 60 to 70% that now we have a bubble in the AI sector because of the valuation of the companies that is doing investment in the AI is way high. It's a record high for wealth based on the future expectation, which is nothing that we can concretely like depend on. Okay. Okay, now let's do some analysis of when the bubble bursts, what's going to happen and why this bubble is bursting basically. We have several scenarios for the Dubai real estate. We have the soft landing, moderate correction, and severe crash. Okay? The probability of having the soft landing is above 50%. The probability of having moderate correction, it's maximum 30%. Then the probability to have a severe crash is less than 10%. By the way, uh, there is a gift for these people who's going to complete this video until the end. So hang on with us. Now, let's go to the first probability, 60% for the soft landing scenario. So in the soft landing scenario, we can expect to a moderate of 5 to 10% supply basically for the changes. So the correction will be remained on 6 to 7% of the price reduced. This is the moderate, or sorry, this is the soft landing scenario for the correction, for the dip, basically. Then we have the moderate correction, which is the probability for that is 30%. That the price will decline between 15 to 25%, especially in the areas that is, we can say it's oversupplied, like business pay or JVC, for example. Okay? And but the areas that is core or supported by logistic or strategic location like downtown or marina, it most probably going to be remain sustainable. And also waterfront communities most probably is going to be sustained. Okay, so the recovery usually for this one, it will be within 18 to 24 months if it's a moderate dip. Okay, and by the way, if this dip happen, I highly recommend any investor to step in very fast to the market, because the people who invested in Corona is very rich and happy today. So these the people who made decent amount of money. Okay. Now let's go to the worst probability, which is it can happen 10%. Like this is the expectation for the worst probability. Okay. So for this one to happen, we need to have several factors. First of all, we need a global recession, we need a collapse in the oil price, and we need a global political crisis. We need something very big to shock the international market, so it will disturb the international business way hard, which is basically if it happened this scenario, it means not only the real estate market in Dubai is corrupt, is like is disrupted. Basically, the whole entire market, even the stock market, is crashing. It's not just the real estate market. Okay, and in this probability, okay, the historically when this happened, Dubai is very fast to correct back. And we saw this in 2008, and we saw this in Corona, and we saw this in all these type of scenarios. So if you ask me, do I consider investment in Dubai in the real estate market as a risky investment? I would say no. Why? Because investment in assets, hardcore assets like buildings and apartments and villas and townhouses, usually we can consider it as a safe assets.
The soft landing. This scenario has a 60% probability of occurring. It is characterized by several key factors. Price moderation is expected to be between 5 to 10% annually. Population growth will absorb new supply, contributing to a stable market. Rental yields are attractive, ranging from 6 to 7%. Overall, the market shows strong fundamentals, indicating a stable and healthy economy. Scenario 2, the moderate correction. This scenario has a 30% probability. In this case, we would see a 15 to 25% decline in oversupplied areas. Business Bay and JVC would be the most affected zones, while core locations would remain stable. Scenario 3, the severe crash. This scenario has a 10% probability. It would be triggered by external shocks, such as a global recession, a severe collapse in the oil market, or a major geopolitical crisis, leading to major instability.
Okay? Now let's compare this to the AI market. What is the expectation to what's going to happen? First of all, we have a sharp correction, and the probability for the sharp correction is between 40 to 60%. Then we have a gradual deflation. It means like a shift basically from the curve. Okay, it's between 20 to 30%. And then we have sustained growth, which is something that everyone look forward to. It will be approximately up to 20%. Let's go to the sharp correction. Okay, for the sharp correction, which is a probability, let's say considerably of 50-50%. Okay, between 40 to 60% decline in the valuation of the assets, which is going to be there for 2 to 3 years. This is the expectation based on the modeling and the data analysis we did for this one. Okay, and for this one is going to be most probably similar to the dot-com bubble. And I'm very sad to say this, but there is lots of papers being published and lots of people discussing about AI might be a bubble now, because the valuation of the companies that is working and investing in AI is not considered to be a safe investment anymore. Okay? Then we have 30% probability to gradual deflation, which is a slow to 20 to 30% decline over 4 to 5 years. Okay? Which is basically something that understood and it makes sense. Why? Because to integrate AI in all of the activities, especially in the modern world, it will take time. It's not something easy that we can do it very fast, especially in Europe and in all the advanced countries that they have so many regulation need to be changed so we can integrate the AI easily in the society. Then we have the sustainable growth, which is the probability that is most of the investor who is investing in the AI market is bidding on, or basically they are focusing with. And with that, there are now gains. The expectation are that there are gains approximately 800 billion revenues gap, which is a huge number, need to be considered also. So when you put your portfolio of investment, you need to be careful about what type of investment you need to focus on. Is it sustainable investment, hardcore asset that you know it will generate for you revenues for a long time period, or you want something fast with high risks, can generate for you lots of gains, but at the same time, it can ruin your future.
Navigating the future of AI investment reveals a story of three possible outcomes. The most likely path with a 50% probability is a sharp correction. We could see a significant 40 to 60% valuation decline in the next 2 to 3 years, as revenue struggles to meet the high expectations, echoing the dot-com bubble. Alternatively, we might experience a gradual deflation, a 30% probability scenario. This involves a slower 20 to 30% decline over 4 to 5 years as the market realigns AI valuations with actual revenue. The most optimistic future, sustained growth, holds a 20% probability. In this scenario, AI drives major productivity breakthroughs, leading to mass adoption within 18 months. As we consider these futures, historical parallels like the 1929 crash offer valuable perspective on the current AI market's potential direction.
This is your choice, this is your plan, and your portfolio. You need to do the plan for it. For the people who got to this point, this document, I just show you 3 slides out of it. I made in detailed document showing you how we did this study and all the information and all the expectation we made for this two bubbles comparison. I highly recommend, if you like, just contact me and I will send for you the full document so you can go through it. I hope this video make an added value for you. Let's meet again, and thank you very much.